Today, Crypto.com sues the SEC after it says it received a Wells notice from the regulator. FTX customers stand to make a profit after a bankruptcy judge approves the exchange's repayment plan. And Joe McCann of Asymmetric lays out his outlook for crypto in Q4. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Cryptocurrencies are taking a breather after multiple days of gains. By noon Eastern, Bitcoin slipped 2% to $62,258. Ether fell 2.25% to $24.18, and XRP dropped 3.7% to 52 cents. Okay, let's talk about the top stories. Crypto.com is suing the SEC after it says it received a Wells notice from the agency back in August. The filing says Crypto.com seeks declaratory and injunctive relief to prevent the regulator from unlawfully expanding its jurisdiction to cover secondary market sales of certain network tokens sold on the company's network. According to the filing, the SEC refused to provide Crypto.com with a list of tokens on the platform that it alleges are securities, and instead referred the company to past enforcement actions taken by the regulator. The SEC has sent Wells notices and filed lawsuits against an array of crypto companies, including NFT marketplace OpenSea, Robinhood, Uniswap, and Consensus. Consensus followed a similar strategy to Crypto.com, suing the SEC back in April to force the court to say Ethereum wasn't a security, but that suit was dismissed back in September. Crypto.com said in a public statement that the notice illustrates that the agency's, quote, unauthorized and unjust regulation by enforcement campaign continues, despite indications of a more constructive crypto approach under the next administration. We reached out to the SEC but didn't hear back right away. Next, a bankruptcy judge has approved FTX's repayment plan. About 2 years after the epic collapse of the crypto exchange, a Delaware judge said yesterday that the company can move forward with its plan to distribute around $14 billion. Customers would actually make money under the plan, receiving about $1.19 for every dollar they put into the defunct exchange. John Ray, who took over the company from Sam Bankman-Fried, said this would be the largest and most complex bankruptcy estate asset distribution in history. All right, let's pivot back to markets for our main story. Crypto World's Tanea McKeel spoke with Joe McCann, CEO and CIO of crypto hedge fund Asymmetric, to talk about today's moves and his expectations for crypto through the end of 2024.
Well, Joe, thank you so much for joining us on Crypto World today. I want to get your view into the markets. It's still a little early in the week, but I couldn't help but notice Bitcoin's kind of stillness, for lack of a better term, when markets were moving yesterday. And then today, stock market up, and then Bitcoin and some crypto, but not others, in the red. What do you make of it? And I'm particularly interested because, the narrative around Bitcoin has been such a topic of interest for our audience. And, as the environment is changing, the rate cutting environment is changing, there's geopolitics and an election at play here. So what do you make of what's going on right now?
I think the big change most recently, of course, is obviously the Fed cutting 50 basis points, but also the coordinated central banks' efforts to also cut as well. So whether this is the ECB, the Bank of England, the Bank of Canada, et cetera. So we do have clear tailwinds as it relates to global liquidity picking up, which has a direct impact on risk assets and particularly Bitcoin, and of course the longer tail of tokens in crypto. But the most interesting thing to me is the news that's recently come out of China. I know we saw ahead of the Golden Week in China, which is October 1st through the 7th, which just ended last night. The PBOC and the broad kind of finance ministry, if you will, of China came out with some pretty accommodative, stimulative policies for not only the banks and helping recapitalize them, but also for consumers. China has a domestic demand problem. It's not a new thing. If you look at anything over the past, I think it's the last 11 quarters, they've had a pretty persistent state of deflation. This is a problem for some place like China, where they're an export-driven economy, and if their domestic demand is effectively zero in terms of growth, they need to fix that. And so there is actually a pretty strong correlation between the expansion of China M1 money supply. So these are deposits that are not necessarily just going in the savings account like M2, and the price of Bitcoin. So what we saw at the beginning of the year, yes, we knew the ETF was coming. we knew that there was going to be a strong narrative behind those ETF flows, and that actually did happen. But what a lot of people didn't see was the expansion of M1 money supply in China as a direct correlation to Bitcoin's price improvement.
How does that fit into all of the other catalysts that are kind of at play for Bitcoin right now? It kind of sounds like this idea that we're, probably going to retest the all-time high by the end of the year, probably even break that and get another all-time high is still a likelihood. But given everything you just said, how would you place that among the other themes, and what would you say is sort of the dominant theme to get us to those new records later this year?
Yeah, I mean, it's all connected. And so, if you zoom way out and you just kind of look at, say, the global liquidity picture, global liquidity bottomed in October of 2022. These liquidity cycles tend to last between 5 and 6 years. We're not quite halfway through that yet, and we're just now starting to see tailwinds pick up on the global liquidity side. The reason I highlight China is, I wrote in our latest asymmetric market update this past weekend, is that they're kind of like the final boss as it relates to all-time highs in crypto. The macro is lining up perfectly for Bitcoin to make new all-time highs later this year. But the kind of catalyst, or really the accelerant, I think has a lot to do with policy that comes out of China. So, if you look at the global liquidity picture today, we keep hitting new all-time highs every week. And that's whether that's, collateral ratios improving on U.S. treasuries that are deposited as collateral, or it's actually the expansion of, central bank balance sheets or easing policies that they've put in place. These are all naturally accretive to things like Bitcoin. I do think that Southeast Asia, being that it is about 70 to 80% of global trading volume as it relates to crypto, and yes, crypto and Bitcoin is banned within China. But as you start to see a loosening of monetary policy in the region, that tends to spread to the broader region throughout Southeast Asia. And so from our perspective, yes, we're going to see things like the TGA being drained. By law, Yellen has to spend that money. That's accretive to liquidity. There is the potential for rules changes to the discount window to remove the taboo effect of banks actually posting collateral to the discount window and receiving cash. That could be stimulative to liquidity here in the United States. But ultimately, what ends up happening in Southeast Asia, we think actually is going to be the thing that drives Bitcoin to no all-time highs.
ETH ETFs posting zero flows for the second time, while Bitcoin ETFs posted their biggest inflows in 6 days. A question that I hear a lot as I'm talking to analysts and investors is, how much do the crypto ETFs matter? The use case for ETH has kind of been called into question this year. I mean, people kind of knew that the ETH ETFs were not going to see the same initial success that the Bitcoin ETFs did. So far, this is very much expected. But then even with Bitcoin, as we've been talking about, really stuck in that 55 to 70K trading range for most of this year since hitting the all-time high. So what is your answer to that question? Do the crypto ETFs still matter? And what's their place in, the price action these days?
Yeah, I mean, it's been a flows story pretty much all year long. I mean, we watch, obviously, the U.S. equities open at 9:30 Eastern time and how it correlates to things like Bitcoin. And there has been a pretty powerful correlation over the past few months, largely driven by what I would assume are the algorithmic trading firms and market makers that are just, managing their inventory in the way that they see fit. Crypto is a much thinner market than something like the stock market. So those Bitcoin flows into the ETFs actually do matter quite a bit. And we saw this in Q1, right? Even though China kind of reversed on their M1 money supply expansion at the end of February, Bitcoin hit a new all-time high in March. That was driven by ETF flows. So we still think the ETF is probably one of the biggest differentiators to this kind of cycle that we're in with respect to Bitcoin, because the true institutionalization of crypto, meaning through Bitcoin, is very real. The problem with the Ethereum ETF is twofold. One, in a lot of cases, I suggest to say there's a case to be made that Ethereum launched their ETF too soon, meaning a lot of folks that were getting comfortable with buying their first Bitcoin was through an ETF. Well, they had already had their allocation to crypto at that point for the year. There wasn't a lot of incremental flow available to them to purchase their ETH ETFs. But two, and I think this is the bigger issue, we at Asymmetric have owned exactly 0 Ethereum all year. We see no reason to own it fundamentally. And it's because Ethereum has an identity crisis. On the one hand, they have made a narrative that Ethereum is, or Ether is, ultrasound money. That is false. Bitcoin is winning that argument. And on the other hand, they're making the case that they are the decentralized supercomputer of the world. They are losing that battle to Solana. So until they sort out this identity crisis, it's very difficult for, I would say, retail or traditional investors to look at Ethereum and go, I should have this in my portfolio when I already have Bitcoin.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.